Hello and welcome back to the channel. When death parts us from our loved ones, it leaves behind more than just memories. It leaves a legacy of mundane responsibilities that we seldom discuss. Among these, the management of the deceased's bank accounts stands as a crucial yet bewildering task for many. Today we explore the journey of a bank account after its owner's demise, unveiling the layers of legal and emotional complexities involved. Each type of bank account follows a distinct path in the aftermath of death, dictated by the presence or absence of co-owners and beneficiaries, as well as state laws and the account holder's foresight in planning. When an individual account holder passes away, the contents of their bank account do not automatically transfer to next of kin. Instead, these funds become part of the deceased's estate. It is then the executor's duty, appointed either through a will or by the court in cases of intestacy, to manage and distribute these funds according to the deceased's wishes or state law. This process can be lengthy and complex, particularly if the deceased did not leave a will, leading to potential legal battles among potential heirs. The executor must also ensure that all debts and obligations of the estate are settled before distributing the remaining assets. Joint accounts usually operate under a right of survivorship, meaning that the surviving account holders automatically assume ownership of the account's contents when one owner dies. This transition bypasses the probate process, allowing for a smoother and quicker transfer of funds. However, the right of survivorship must be explicitly stated in the account agreement. Without it, the account may be treated as part of the deceased's estate, thus subject to probate and possible contestation. Accounts labeled as payable on death, POD, or transfer on death, TOD, provide a straightforward method for account holders to designate beneficiaries. Upon the account holder's death, the named beneficiary can claim the funds directly, without the need for probate. This not only simplifies the process, but also ensures that the funds reach the intended recipient quickly and without legal complication. However, the beneficiary must provide proper identification and a copy of the death certificate to access the funds. If the deceased's bank accounts must go through probate, the executor will often open an estate account. This account serves as a temporary repository for all the deceased's assets, facilitating the payment of debts and the distribution of net assets to rightful heirs. The estate account acts as a financial hub during the probate process, ensuring that all financial activities are tracked and handled according to probate laws and the wishes of the deceased, as stated in their will. The executor or next of kin must notify the bank of the account holder's death as soon as possible. This notification is usually accompanied by a certified death certificate, and depending on the bank's policy, may also require additional legal documents, such as letters testamentary. This step is crucial to prevent unauthorized access and to initiate any processes required by the bank, including the transition of account ownership or the freezing of the account. Upon notification of the death, banks often freeze the deceased's bank accounts temporarily. This freeze serves to protect the estate from fraud and unauthorized withdrawals, providing a window in which the legal standing of the account can be verified and proper protocols followed. While this can prevent immediate access even by authorized individuals, it is a necessary measure to secure the assets of the deceased until all legal processes are duly followed. The executor is responsible for settling any debts and obligations from the deceased's estate. This often means that creditors are paid out before any distribution to heirs can take place. The priority of these claims is typically dictated by state law. In some cases, if the debts outweigh the assets, the heirs may receive nothing. The estate is declared insolvent, and the creditors may only receive a portion of what is owed to them. To avoid complications and ensure that their financial wishes are respected, it is crucial for individuals to pre-plan. This includes designating beneficiaries for bank accounts and keeping estate planning documents such as wills and trusts up to date. Such proactive steps can significantly ease the burden on loved ones by providing clear directives and avoiding potential disputes among heirs. State laws vary significantly in handling the deceased's bank accounts, and unusual situations can further complicate the process. For example, Accounts with no clear beneficiary or co-owner, or those involved in legal disputes, require careful navigation through state-specific statutes and legal proceedings. Understanding these nuances is essential for executors and beneficiaries to manage expectations and responsibilities effectively. As we conclude our journey through the financial aftermath of a person's death, it's clear that the management of bank accounts is more than just a legal process. It's a deeply emotional and ethical undertaking. The decisions made in this regard can reflect a person's final wishes and can significantly impact the lives of the bereaved. Understanding these processes not only prepares us for our inevitable end, but also equips us to handle the responsibilities with empathy and efficiency, ensuring that our financial legacies are as we intend them to be. Hope you enjoyed this video. Please share, like, and subscribe, and I'll see you on the next video.